pretty much wrapped up here in the US, but it's never too early to start thinking about next year's crop as well as crop insurance. We're going to combine the two here today. We've had this come up over the years in conversations. Guys, are afraid to market ahead even though they have crop insurance because they might not raise bushels. And we want to lay out a couple scenarios for you to show you how crop insurance is going to work along with marketing ahead. So that's what we're going to talk about here today. As always, keep in mind everything we're discussing is for education and example purposes. Make sure that you know and understand your own risk tolerance as we go through this presentation. So, like we said, crop insurance really is there to help you incentivize forward marketing. At the end of the day, we also have to remind ourselves that crop insurance and really insurance in general is there to make you whole. It is not there to guarantee a profit. So let's just take a 1,000-acre corn farmer with a 200 APH, and their insurance coverage on their revenue protection policy is like 75%. That's going to mean you have an insured bushels of 150 bushels per acre, and we're going to use a spring price, a made-up spring price of $450. That's going to guarantee you $675 an acre in revenue. So let's go fast forward to the fall, and you raise 0 bushels. However, you are an aggressive marketer and you sell your insured bushels, so 150 bushels an acre, and you manage to average $5. Now our harvest price is down at $4.10, so you're going to get an insurance payment of that $675, your entire revenue protection policy. You're also going to need to close out your contract either on the board or with the elevator. Remember, you're sold at a $5 average and you're going to buy back, let's just say at $4.10, you're going to have a gain of 90 cents on those bushels as well. So now that's another $135 an acre, bringing your total revenue here to $8.10 an acre when you combine it with your revenue protection policy. Now maybe this is profitable, maybe not, I'm not sure, but again, the point here is why it's okay to market ahead. Now we do have to ask ourselves, maybe, yeah, this looks great, $810 an acre, but what about next year's crop price? We're likely much below that $5 average you were able to sell at. So just kind of keep that in mind as what that looks like for your entire farm. Now let's go to the other scenario. We're still going to market 150 bushels, or our 75% coverage level. However, the harvest price is going to be $650, and we still ended up raising no bushels. So now we're going to get a revenue protection payment of $975 an acre. You're going to get your $650 times the 150 bushels. However, remember, we did sell at $5 to the elevator, so we are going to have to buy those contracts back for $650, which is going to come out to a loss of $1.50 or $2.25 an acre. So when we take our insurance payment and then buy back those contracts, we're still net revenue $750 an acre. Now again, whether that's profitable or not for your operation, I don't know. But at the end of the day, you can see that the insurance payment helps you cover the cost of those contracts that you sold ahead, regardless of whether or not you had the bushels. The other thing to keep in mind is next year's crop price is likely in a good point for your operation. And so we would argue, as we always do, that prices going up continue to be a good problem to have for your farm operation as a whole. So wrapping everything up in here, remember, insurance is there to encourage you to forward market. You should be comfortable selling up to your insured bushels. Once you get beyond that, especially if you don't know your crop status, that can add a little more risk, right? But if you have a 75% policy, you should comfortably be able to sell up to 75% of your bushels of your APH. Remember to diversify your strategies, do some on the cash, do some on the board, as for flexibility. But nonetheless, even if you are a full cash marketer, you can see where your insurance payments are going to help you offset the contracts regardless of whether the market goes up or down. Remember, insurance is here to make you whole. It doesn't guarantee a profit. And then lastly, as always, we always ask ourselves, what's a better problem to have? Maybe your revenue per acre numbers are a lot higher when the market goes lower, but when you look at your total farming operation as a whole over multiple years or your career, is it better for lower prices or higher prices? That's just something to keep in mind. If you guys have questions, reach out to us. We can help you on the insurance side. We can help you with marketing and setting a plan. We're more than happy to do that. As always, like the video, subscribe to the video, and we hope this gives you a little more confidence as you head into 2025, especially once that insurance price is set, to be a marketer, sell ahead, sell some bushels ahead, and know that your indemnity payments are there for you in case you need them.